One. Hello, this is Dan O'Brien with Kansas State University, here with my colleagues from North Dakota State, David Riplinger and Frayne Olson, and we'd like to talk about bioenergy issues at the moment. And the discussion of bioenergy is consistent with all the volatility and factors that are coming into world energy and economic and agricultural markets at this time. We'd like to start out, though, by turning to you, Dave, and if you'd like to discuss some of the recent legislation, or at least proposals coming out of the EPA and other things that are being considered with regard to energy policy, that would be a great thing.
Yeah, absolutely. And so there's been a lot of news, market moving news the last month or so. First beginning with the House version of the Big Beautiful Bill, which is the future spending bill, which has a variety of cuts, but actually was looking at, first of all, extending 45Z, which is the clean fuel production tax credit, which a lot of agriculture is looking towards for, supporting the build out of sustainable aviation fuel and the continued profitability of the biofuel industry. So that was very supportive. That was followed up a few weeks later by the Senate version, which has a number of differences, but still very supportive of biofuels and consequently agriculture. And then finally, just over a week ago, we heard from EPA the proposed renewable volume obligations for 26 and 27. And those numbers for biomass-based diesel were much higher than pretty much anyone was expecting. And very bullish, the markets responded very strongly into the oil, seeds, and even beyond. Just far in excess what people were expecting. And a lot of people, I think, were very excited by that news, from the biorefineries to the crushers to the oil seed producers. Kind of that third giant piece of good news coming the way of biofuels and agriculture, which going back about 5 months, I don't know if you necessarily would have foreseen things to go quite this way. And of course, for both the House and the Senate bill, they have to go to conference. They have to, get the language past both houses and have the president sign it. But both, you know, very supportive of 45Z and consequently agriculture.
And we're shifting over to, or maybe back to a focus on RINs in terms of how we're presenting the amounts that are going to be again policy driven usage targets from the EPA. Note that the EPA said it projected the number of RINs generated by biomass based diesel at 1.27, 1.28 RINs per gallon in 26, 27, and had been 1.6. So, that's 5-10%, something like that. And not to hop in on your subject matter, Dave, but I remember how disappointed the biodiesel industry was with the last time an announcement along these lines came out, and so a lot of positiveness in terms of the direction going forward, and could get uh, uh, I guess that, well, the volume of the mandate in 2025 for biomass-based diesel was 3.35 billion gallons. And here that with this projected mandate, am I correct? And now it's up to 5.61 billion gallons. So that's uh, that's almost 50-60%. And I don't know if we'll see at the bioenergy plants if the construction of those plants will reignite as they were again a while back, as we were anticipating all of that. But any thoughts on that from a North
Y-
Dakota perspective?
Yeah, I mean, it obviously very supportive. One of the things, too, you mentioned the last announcement that 2.5 years ago already, um, year and a half. It was very interesting because we have the capacity, we have the production, and that number came in low. And it's been the margins for biodiesel and renewable diesel have been really pressured with the new year as 45Z came online. The biodiesel tax credit was gone, replaced with 45Z, which uh, has a lower incentive per gallon. And we've seen a dramatic reduction in production of biodiesel, and especially, excuse me, primarily biodiesel and renewable diesel. And now we're getting back to the point where we're taking up that slack. And that the intent of the renewable fuel standard was always policy-driven support and policy-driven demand. And when you had that slack in the system, especially how the RINs kind of overflow into the next bucket, that slack was depressing on all prices and depressing on biofuel use generally. And so this number is very supportive again to get it higher, to use some of that production that was going to be there anyways. Then also we have all of these old banked RINs that we need to work through. And so this is, really quite supportive and on its own, very good news. You also mentioned the fractions or the weighting. And so one of the things with biomass-based diesel, it's based on energy content. So it's relative uh, to another fuel. The really interesting thing that's happened in all three situations is looking at foreign feedstocks or biofuels. And this is very aggressive on all three fronts, where you're only going to generate half as many RINs. So you need twice as many gallons to meet that number. Very, very supportive of domestic feedstock and biofuel production. And then in the Senate and House bills, kind of that same thing, different language, but very much preferring or providing preference to either the feedstocks themselves or the biofuels. And again, that's uh, very, very bold, a substantial change from the past where the policy was agnostic.
A strong reduction on imported biofuels coming into the country. I'm not sure if vegetable oil overseas how that was affected, but I would not be surprised. I've looked at the details. And also another thing that's different this go around was that the there was a coalition formed of both oil industry and biofuel groups to actually come up with this. So perhaps this positive outcome had something to do with the united front. What
I don't think there's any doubt to that. I mean, to me, it's not even strange bedfellows. Chevron produces a lot of biodiesel. They have significant assets, which they acquired to provide fuel so they could meet California's low carbon fuel standard. The general pivot, we saw because of California policy was really, and with the Biden administration, the thought used to be that, and this is from the petroleum industry perspective, that ethanol was taking part of the tank. And now the idea is we need lower carbon fuels to keep the internal combustion engine, to keep those vehicles on the road. And that's, um, it's an example, maybe a little bit more aggressive than the situation really is, but that alignment of interests, and again, driven by California because they're obligated parties, these same petroleum companies, they have to meet, this different regulatory rule, which, drives them to seek and find ways to get low cost, low carbon fuels. And so if they can support the RFS or support federal legislation, that's helping them now, as opposed to it being a more confrontational situation.
Before we move on to a discussion of the global energy markets and such, any comments you want to make on the Supreme Court's recent decision on how small refinery waiver disputes would be settled?
Yeah, and so yeah, they made the decision to require that all of the suits can be made in a single district court. Likely to advantage in a lot of cases. This is clarity and less work to deal with. And really, if you think about small refinery waivers, they've really been kind of this leakage. You've had this number set, and then you say, well, this percentage or these certain refineries don't have to comply. And again, it prevented the RFS from doing what it was designed to do. And so this is kind of it's firming things up. And so, very positive news. And if it hadn't been for the Senate and the House bills, if it hadn't been for the RVOs, that would be, the big positive story for the month for biofuels. And just based on what's happened, it takes fourth place. But very, very supportive if that situation can be um, better understood. Again, because there's still all of this uncertainty and this kind of sway back and forth between, based on the administration or where things are at in the courts, and now they're getting everything kind of lumped up and put into a single basket.
Let's shift gears a little bit. With all that's happening from a macro point of view in the world geopolitical, energy, and economic spheres, Frayne, do you have some perspectives on the global energy market uncertainty and what type of volatility this either may or may not lead to?
Yeah, so first, a couple disclaimers. Obviously, like yourself, Dan, I focus a lot more on the grain side, but we can't ignore what happens within the energy spectrum, especially because of the linkage now with biofuels, and ethanol and the renewable diesel sector and the biodiesel sector. So we're spending more time studying what's going on in the energy markets, and I know there's a lot of farm managers that look at that and typically the relationship is as energy prices go up, it tends to be more positive for grain prices and then vice versa. And there's two reasons for that. One of them is obviously the correlation through the energy sector. The other part is we tend to see a lot of the outside investment community put together their fund packages. And when they think about commodities and including commodities as part of their investment portfolio, most of that is energy, but they also put in a lot of the grains and meat products as part of that commodities bundle. So we are seeing price correlations going on between energies and the grain markets, a little stronger than we have seen historically. But I do want to caution people that, we got to remind everybody, especially for ethanol, ethanol is really a fuel additive and is priced as a fuel additive. We're not taking a gallon of ethanol and replacing it with a gallon of gasoline, which is, I know Dave referred to that before. There's a lot of, early on, that was kind of the mentality is that, well, all this ethanol is replacing gasoline. And that's really not the case in today's world because we need it as an octane enhancer. So my point is, yes, typically as gasoline prices or energy prices increase, we tend to see an increase in ethanol prices, and then corn prices come along with that. However, at some point, that gasoline prices get high enough that we start using less. And as we start driving less, as we become more conservative, if as our household budgets become tighter, and you say, well, yeah, we're still going to drive to work, but we may not take that really long vacation. Okay, or we may not drive to grandma and grandpa's house nearly as often as we used to do. As prices get high enough, it starts changing behavior. Mileage starts to drop, which also means we don't have to blend as much ethanol. So as long as we stay within kind of a typical range, I'm not going to define that, but as long as we stay within a typical range of gasoline prices, that relationship of between energy and grains tends to hold. But I just want to caution everybody as it gets really, really high and people start changing their consumption habits, that they can actually have a negative impact. As crude oil or gasoline prices go extremely high, we may actually see a drop or reduction in the amount of ethanol that would be needed. So the one thing I can say for sure, certain, we're recording this on June 23rd, and there's a lot of activities going on in the global world economy as well as within the military front. A lot of huge uncertainty, obviously, within the energy sector. So the one thing I can say is we will have continued volatility. And as we talked earlier before we came on, volatility is not always a bad thing because it does give you the chance to be able to price at higher levels than maybe normal or have been typical because of this risk or uncertainty. But the challenge is you have to take advantage of that. And that's always the difficult part to that is knowing when do you want to sell and making sure that you're ready for those events to occur.
And this may be more of just a Kansas observation, then I won't hold you guys from North Dakota State to this, but it seems that we're seeing in some cases some pretty decent movement in some of the corn and soybean sub-markets,
Mhm.
strong corn export numbers. We'll see what the quarterly stocks report, what hint that gives us for feed usage are coming up a week from today on the 30th. Uh, on the soybean side, strong market movement for soybean oil,
Mhm.
soybean uh, yeah, soybean meal has had some pretty strong moments, kind of moderating a little bit here of late. So whether let's say if something happens in the Straits of Hormuz and we really have a disruption to shipping, the oil market jumps up. I'd be curious now to see how quickly the underlying corn and soybean markets would respond. We're kind of in the mode now of, hey, we got a big crop coming.
Yeah,
That's really
yeah,
kind of
yeah.
where the markets are looking at, but we're at the same time that we've got all this other stuff going on underneath. So anyway, I guess we'll see where all that goes. I want to throw one thing at you, Frank, because I know you
Sure.
watch this. In the with the current administration, we've had some adjustments on gasoline mileage standards requirements out into the future,
Mhm.
and the current trend with this administration is to soften those.
Mhm.
Either eliminate them or take them down lower, and then even some movement or discussion in the electric vehicle area. So I guess I'd throw that on the floor. Do you how do you respond to that, or is this just more an issue that if we don't like what this administration or the previous administration was done, we wait for the next 4 years and get something to change for the next,
Well,
then go from
no,
there.
you bring up a very good point, Dan, and that is an issue I get questioned once in a while on. Um, so those are what I consider longer term issues. So typically, what happens when a vehicle enters service, that vehicle tends to stay with the ownership can change, but it tends to be on the road for about 10 years, give or take. And so the new requirements on average mileage counts for new vehicles, those are the brand new vehicles. And as the government requires those averages to get higher and higher and higher, we become very creative in how we try and reach those mileage targets. However, I want to caution everybody that, that will eventually have its impact, but it's not something that's going to happen, within 6 months or maybe even 8 or 10 or 12 months, just because we tend to run our vehicles for a long time. And so this is really a longer term play. I know the industry, especially the ethanol industry, is long term concerned about that. That as average mileage rates go increasing and as the electric vehicle market becomes a larger portion of the total vehicle fleet, that the long-term forecast for demand for gasoline is flat at best, if not going down. And that is a concern, obviously, for the ethanol market long term. But I view that as something that will be several years in the making, not something that's going to happen very, very quickly.
Almost aspirational in a way. So, David,
Almost, yes.
yeah, almost. Dave, any final comments from the energy market sector directly that you might have?
Well, Frayne's comments brought up a lot of things, but I don't think we want to go for an hour. Um, One interesting thing, so India's ended up being a very large destination for U.S. ethanol exports, and I saw that they just established a rule, so they are going to take older vehicles out of the fleet. So
Oh
you hit 10
my.
years or 15 years, you're done. Partially for those reasons. But that those types of policies can make a difference. It's also a little unique thing in fuel economy standards where it doesn't apply for all vehicles. So we've seen this divergence in the fleet where you have very, very small cars and very, very large pickups, right? Because the rules could be a little bit different. And so what we're really doing is we're forcing those folks in that market to have very, very tiny, light bicycle style cars, or we might get there soon, and then we'll have, the rest of us or the rest of the market driving whatever we want.
I'm not discreet enough to not comment about how long I live next to I-70, and a lot of those very, very small cars, they're just about the size of a big tumbleweed in Kansas. So you got to be careful, as you're driving down the road. Don't color them brown, please, so we can tell them apart. But I'm sorry, I'll probably pay for that comment. But anyway. Well, gentlemen, thank you very much. Really appreciate the chance to speak with you. Again, this is Dan O'Brien with Kansas State, Dave Riplinger, and Frayne Olson with North Dakota State University, and we gather once a month to talk about bioenergy issues. So, thank you very much.